Start with you. Is this a buying opportunity for the banks?
I do think financials are worth a little bit of a bite here. You have to remember what's really causing them to be down. As we pile on to trade and as we pile on to these international headlines, you're going to continue to see the yield curve get pressured, especially on the long end. And then you have that fear of a reinversion. That's obviously going to affect financials, but it's not necessarily that trade and international tensions are going to be financials as the target. So I still think financials will hold up here, and I think if we get a little bit of a de-escalation, you'll see them come back.
Jeff, though, is this a lot about when you look at trade? I can't seem to think that, and when I'm looking at financials and trade, that the two of those go together. Is financials a place maybe I could stay safe? I know they're connected, of course, to what's going on with yields, and so that, in effect, has a lot to do with trade.
Well, one of the good things and one of the bad things about financials is, especially banks, they're kind of a proxy for economic growth because they provide the capital that drives economic growth. So trade in and of itself maybe not crucial, but to the effect it impacts global economic growth, that plays right into the banks. And we're kind of seeing them fall in and out of vogue week to week almost, depending on what the market expects out of kind of China-U.S. trade relations. I mean, coming into September, I think the banks had really oversold. Early September, they probably rallied back too far. It would seem to me they're getting kind of back to that oversold position again with the downturn today. But the trick is, in this space right now, you have to have a macro call. If you think we're going to get a trade deal, that things will be okay economically, financials are buys. If you think we're not going to get a trade deal, we could be kind of walking into a recession, you want to stay away from the space.
What do you think about earnings season, Jeff? About to kick off. Do you think that can be a catalyst to turn these stocks around?
From where they're at now, yes. I think it's actually going to be a pretty good earnings season relative to maybe some of the expectations. Some of the specifically capital markets kind of information we've gotten out has looked a little better than I think people were thinking. But the big key is going to be what's the forward outlook? You know, what are CEOs expecting and seeing in their businesses? And I'm not sure they're going to have a whole lot more insight than kind of we do on the outside. So I think the outlook will be constructive, but maybe a little short of the really positive outlook that would really boost the bank stocks up again.
Liz, as the Fed looks at potentially considering rolling back some of these regulations from Dodd-Frank that may help some of the smaller or regional banks, is that something that you might find attractive as an investment opportunity?
I mean, it could definitely help. I agree with the comments that were just said. Earnings season is probably going to be more positive this quarter than it's been earlier in the year. But as long as there's pressure on the yield curve, we're still going to probably get some cautious guidance, especially out of financials. The regional banks are really more a proxy for the consumer. And as long as the consumer is strong, you can still look at regional banks. But if the consumer starts to get pressured, and particularly consumer sentiment starts to get pressured, regardless of some of those regulation changes, I don't know that I expect anything as a huge pop to the regional banks anytime soon. I agree also that as an economic proxy, financials are something that you still want to be in, and they end up feeling a little bit like a necessary evil sometimes. But the financials in the U.S. are, frankly, the most attractive ones. And if you have to hold some financials, you're going to want to hold U.S. financials.